Hey, good morning, Bill. Matt Petrozelli, CEO, Valley National Financial Advisors. Good to have you on the call. We know you're our head of investments. Thought we could spend some time today talking about the outlook for next year, 2021. The pandemic, it's still going. What are your thoughts?
Yeah, it is still going, still continuing to shock and confuse. But if you look at what happened in 2020, we started the year off okay, good shape. Everybody thought things were going to be fine. Pandemic hits, the market drops by 34%. Fed comes in, does everything in their possible toolkit to fix things. And by the end of the year, we have record new highs on the markets. The Nasdaq coming in at 40%, S&P close to 15%, and the Dow up, over 5%. Who would have thought we'd be here today? But the reality is, with the Fed with zero interest rate policy, fiscal stimulus, monetary stimulus, all the various liquidity tools that they threw at the markets, and then of course the vaccine coming in November from three different firms and starting to be administered last week and continuing right now. We really have seen quite a turnaround in what we thought was a really really dramatic sort of devastating market hypothesis back in March.
So you think moving forward in 2021, the pandemic's going to be a headwind or a tailwind now that we've got some vaccinations and other remedies and treatments coming down the pike?
Yeah, I think the pandemic is going to be a tailwind, but what is happening around the pandemic, I'm sorry, the pandemic is going to be a headwind, but the everything going around the pandemic is absolutely a tailwind. We have fiscal stimulus. So the Congress passed another $900 billion bill just yesterday. Looks like it's going to be, money given to consumers that need it. They've already talked about a second one, or that will be the third one coming in the first quarter of 2021. Fiscal stimulus coupled with monetary stimulus. The Fed has said, zero interest rates for as long as they can foresee. I mean, I don't know how long that is, 2022, 2023, but zero interest rates really add an incredible amount of liquidity to the markets. And we've seen companies be able to borrow at low rates. All the markets really are trading on the fact that zero interest rates are helping the economy recover.
Bill, you talked a little bit about corporate profits. Clearly, that was a tale of two cities in 2020. You had some industries that were having record profits, and you had some that obviously are closing up their doors. What does the outlook for corporate profits look like in 2021? Are we going to see dividend increases, stock buybacks with interest rates as low as they are? What's your picture there?
Yeah, I think we're still going to see reasonable increase in corporate profits, probably 8 to 9%. And a lot of that is simply from the ability of corporations to borrow. They're able to borrow at record low rates. They're able to take that money, invest it in capital expenditures, pay dividends, share buybacks, all of the above. Bond spreads are at tightest levels ever, giving corporations the ability to really improve their balance sheets, which we've seen all through 2020. And I think that's going to be a big part of what makes corporations very profitable in 2021.
Any risk that the new administration that'll be taking office in January will be able to, temper any corporate tax increase or cap on buybacks and dividend increases?
That's a really good question. I wish I knew. I wish I had a good answer for that. Unfortunately, the Senate race in Georgia has a lot to do with that. If both seats go to the Democrats and they control now the House, Senate, and the White House, they could very well raise the corporate tax rate. And I believe that the lower corporate tax rate that the Trump administration put in was a large part of how we saw corporations investing and bringing money back onto our shores from overseas accounts. We could see the opposite of that, but that really all hangs in the Georgia election, which it's difficult to predict right now. And I don't think even if we had pollsters predicting, anyone would believe them.
Right. I think 2020 was a year of seeing an acceleration of long-term themes, whether that be, e-commerce, digital onboarding, biotechnological advances. What do you see as long-term trends? Do you think we're going to get back to normal, or do you think some of these long-term technology trends are here to stay?
Yeah, Matt, a really good observation on that. E-commerce, I saw a number the other day. Retail spending for 2020 increased fivefold in e-commerce versus old-fashioned, going to the store and buying goods and services. I think that e-commerce section is going to continue. Americans are going to get into the habit of buying online, whether it's from Amazon, Costco, CVS, or your local grocery store. Once those habits get into place and people say, you know what, I don't have to go to stores anymore. I can now replace that time I used to spend doing leisure time. That's a big change, and people will get into the habit of that. Dramatic increase in e-commerce, and we're going to see more of that. It's a lot easier to increase e-commerce sales if you're a retailer than to build a bricks and mortar store and say, okay, now we're open for business. Let's wait for the sales to come in.
Right. In conclusion, anything you want to tell our investors, or anything they should know about 2021?
Yeah, yes, Matt. I think the themes that we've seen in 2020, so technology increases, working from home. Right now you and I are on a go-to meeting. People do Zoom meetings now, go-to meeting, Microsoft tools, whatever that means, that's technology. Spend in technology. We're going to see working from home continue. I think maybe 40 to 50% of the service economy can continue to work from home. That means increasing cloud computing, cloud storage, high-speed internet access, cellular connections. All those types of themes are going to continue. The big tech innovations are going to keep moving on. We're going to see biotechnology be very important, not just healthcare, like finding ideas for the vaccine, but people working out, things like working at home, working out at home. Gyms are now in question because of the pandemic. So people build their own gyms. So that type of those types of things are going to continue to be very important. And then lastly, there was a big article the other day about this potential Russian hack on our systems. That puts software against anti-hacking really into play. We have our thematic investment strategy, covers all of these things that we've talked about. Increases in cloud computing, technology, work from home, biotechnology, and healthcare related themes. So a lot of things to watch in 2021 and a lot of reasons to stay invested.
Thanks, Bill. Have a great holiday and a happy new year. Thanks for your
You
time.
too, Matt. Happy New Year.